Welcome everyone to the Story Trading Weekly Meetup. We got a double header tonight. We got a deeper dive on Kodak, which we presented last week with special guests, and we got Mark Gomes here presenting a stock as well. So first, a quick disclaimer: Story Trading is not an investment advisor. That goes for all of our guests as well, unless they state otherwise. Investing in securities involves significant risk of loss. This event is being recorded. The recording will be provided to our VIP members, and then parts of it may be published on social media after a short embargo period. For those of you who are watching on social media and not familiar with story trading, what is story trading? What is a story trade? Story trading is the practice of understanding market pricing, aka the story behind the trade through the lens of the four pillars of fundamentals, catalyst, sentiment, and technicals. We collaborate now in a WhatsApp and Zoom community. We're building our own app. If you want to get on the wait list for that app, you could do that at StoryTrading.com, where you can also check out our events, our Spotify channel, our YouTube channel. Now, story trading, when we talk about stocks, we break it down into the four pillars of sentiment, catalysts, fundamentals, and technicals. The idea being that all price action, all overvaluations, all undervaluations can be explained by looking at stocks holistically and breaking down the information into these four pillars so you can understand markets better and position yourself and empower yourself to make better investing and trading decisions. And with that, we're going to bring Mark Gomes. He's going to present VWTR, Vidler Water, market cap 292 million, last trade $16.19. Here's the chart. And, you know, I know he's been talking about this for a while, but we haven't talked about it in the story trading community. And, you know, I told Mark, you got to think about this carefully, man. This stock just ran up hard, 12 to 16. Are you sure you want to present this now after it's run up so much? Not only is your credibility on the line, but so is mine at Story Trading. And he said he wants to be here. So that makes me excited to hear about the story. So Mark Gomes, take it away on VWTR.
Yeah, thanks a lot, Ben. How you? So obviously, we have had a heck of a run in the stock already, and I'll discuss that. But let's just start with the basics real quick, and I'll make this a very short presentation. Number one, Vidler Water, VWTR, is the largest private owner of water rights in Arizona, Nevada, which happens to be one of the fastest growing areas of the country in terms of, city growth, population growth, and also semiconductor factory growth. Okay, so all three of those things require tremendous amounts of water. Most people might not know semiconductor plants require tremendous amounts of water and can actually end up utilizing 10% of a community's water supply, just a single semiconductor factory. So that's going on there in Arizona, Nevada area. Okay, so that is one of the things that makes this company very interesting, because they hold these water rights and on the balance sheet at a very low rate. So if you look at their cost basis on the water rights they purchased over the last several years. Okay, this company's been around for a long time. Some of these water rights were purchased, 10 plus years ago. The holding cost is about $12. And I'm not going to give you the measurement. I'm just going to, $12 per share. Okay, that is the cost basis for those water rights. It works out to about $12 per share of VWTR. Now, recently, they had a sale of some of these water rights that was somewhere between 4 and 5x what they paid for them. And I'll get to the reason for that shortly. But bottom line there is, as you can imagine, if they get 4 to 5x on all of their water rights, then we're talking about a stock price that might be worth as much as 60. Now, I'm not saying that's the case. In fact, doing the math, looking at my contacts and all that, we're deriving a fair value of those water rights as being currently in the range of $25 per share. Okay. Now these are assets. Okay, this is not like a price target. This is what these things are worth today and increasing. Okay, because the water rights that they recently sold, the price since that sale, the most recent sale that they press released, the price has gone up more than 10% since that last press release. Okay, so at that time, I was able to get with my contacts and figure out what a fair value for the stock was. And I said, wow, this thing should be really worth in the low 20s now. And that's when I started, pushing the stock in my community, right? And in the few months, it's been 4 months since I reintroduced the stock to my community. In just 4 months, we've had a more than 10% re-rating of the value of these water rights. Okay, it sounds boring, but here's what's going on. There is a massive drought going on the West Coast. You can call it global warming, you can call it whatever you want, right? But it's a record-setting drought going back 1,200 years, and it's getting worse. So those of you who follow me already, if you go to markgomesstocks.wordpress.com, I just released a list of the most recent news items and information that you can use as reference to what I'm discussing tonight, right? But we're going to quickly get to the point here. So what you have is, obviously you see inflation, you've got commodities going, through the roof. You've got the building going on over in Las Vegas and Nevada, in Nevada and Arizona. You've got the U.S. bringing semiconductor manufacturing back from Asia, right? And all that is culminating in a massive need for water at a time where there is a record-breaking drought that is actually getting worse. And again, you can see the links in my article that I just released to show you that even just this week, we're seeing the data getting much, much worse, which means obviously the prices we're going to keep going much, much higher. All right. Now, here's where it gets here's where it gets really exciting. So if you feel like it's great to buy $1 for 50 cents, well, that's what we're getting here. Not only that, but there's tremendous demand. There's actually one of my contacts said that one of the last sales, he suspects that it was made by a company owned by Warren Buffett. Okay. And they believe that what's happening now is the company was raided by activists a few years ago, and they were forced as part of that activist movement to start monetizing the company a lot better for the sake of shareholders. So we've seen more sales of the water rights. And what I'm told is that they're going to continue selling these water rights. And what's likely to happen is that they're going to get to the point where it becomes very clean, where some of their water rights are in like Reno, Nevada, some of their water rights are here, there, or wherever, and then the rest of the company starts getting picked off in large chunks, if not whole, by some private equity company. Okay, and so you're starting to see that being reflected in the share price, not only the quick movement in the increasing value in water, right, but also demand anticipation that this company might get acquired sometime soon. Now, in the meantime, right, I don't like to count on acquisition for how I'll make my money, but in the meantime, the activists, again, not only did they force the company to start monetizing these rights, but the use of those proceeds. So when they get money for these rights, they're using that money for buybacks. And this management team knows exactly what those assets are worth. So they've been buying back stock aggressively. And the more the prices go up, as I mentioned earlier, you saw the prices up. It's actually, I think, 12.5% is the exact number. They keep buying the stock up. Okay. Now, what's that's done, and here's the punchline, is that it has pushed the stock up to the point where now it qualifies for the Russell 2000. And what that does now is it's starting to force institutions to buy the stock. And it's going to be over $20 million worth of stock that they're going to have to buy. So now not only is the company management buying back shares with the money that they received from the recent sale of water rights, but now we have institutions coming in being forced to buy the shares because the company is slated to be added to the Russell in a couple of months. All right. So if we just final point here is if you look at the chart, and as Ben astutely noted at the beginning of this presentation, and we talked about this before deciding that I would come on and talk about it, I continue to talk about this company forward further because we've got this extra buying coming on in. And then if you do want to look at technicals, so this is, Ben's show. So we do talk about catalysts. I talked about that. The fundamentals, I talked about that. And then obviously the sentiment is growing behind this company. And if you look at the technicals, what you see is the company has just broken out to a new multi-year high. Okay. And with that breakout, if you look at the last move in the stock back in 2021, right, the channel in which the company operates in enables a bottom to top move of 83%. Okay. So if we get that 83% move that we got in 2021, now that move takes us to $21 a share, which is still a steep discount to our estimated fair value of their water assets of $25 per share. Now, I don't expect us to hit that $25 a share unless the company gets bought out, because generally the company will sell for a discount. But historically, I've played with the stock in the past. And what you do is if you buy the stock at a 40 or 50% discount to fair value, you can ride it up to a 10% discount to fair value. So at 25, it would make sense that the stock can go to 22.50 right now. And that's just assuming that the water right value does not continue to increase, which it has been doing every year for the last 10 years. It's been averaging an increase of 17% increase in value for these water rights per year. But now, so far this year, they're up more than 10%, because what you're seeing is these droughts are drying out lakes. You can go check out I'm not going to get into it here because for the sake of time, but you'll see like Lake Mead, for example, the Colorado River is emptying out. It's a severe crisis out on the West Coast. You can see California has gone on a red alert. Arizona is on the verge of it. They have communities fighting each other over the water. It's becoming it's going from crisis to disaster in terms of, people fighting over water now. And this company is obviously, it's a sad situation, but this is, in a capitalistic world, there's nothing we can do about it except, hey, here's a company, VWTR, that's ideally suited to take advantage of the situation. So that's why we're in. And right now it is my second largest position, only to Smith.
Wow. I didn't know it's the second largest. Cool. Thank you, Mark. So I'm going to ask you to put your Ben hat on for a second and kind of speculate. What do you think? See, I noticed that the big move started right after earnings came out, March 21st.
Right.
Was there something in there that you think changed the mind of the market?
Yeah, I mean, so they recently closed the deal where they had announced the deal where they were going to sell some of these water rights, and it started to become clear, right, to people that are looking into this, that the value of their water rights are significantly higher than what they're being carried for on the balance sheet. Okay, on the books, when you look at the cost basis of what they paid for this. So, the closing of that deal was really a catalyst to wake people's eyes up to say, hey, there's a tremendous asset here that hasn't been marked to market. What ends up happening is when they make a sale, they don't revalue their assets to the current market price. What they do is when they sell some water rights, they announce an extraordinary gain on the sale of assets, right? And then they'll take that cash and they're either going to give a special dividend or they'll buy back shares. And thus far, they've been buying back shares because they feel that's the best use of funds, given what our research tells us, which is the stock. I think they keep buying back shares until it's in the 20s. And then when you got the institutions coming in, having required to buy $20 million worth of shares to put into the Russell indices, it's the equivalent of a short squeeze.
Sounds good. So, so that deal was announced with the quarter that was just reported.
So you've had SEC filings that coincided with obviously the filing of the quarter. So that gave more insight into the financial details of what's going on there. So, so that kind of feeds into it. So you see on March 21st, for example, they filed their 10K.
Right. Okay, cool.
So you can see that the move in the stock price really started gaining steam right after that March 21st filing of the 10K, where people really could get good visibility into what's going on. And you could see that the volume has been accelerating, right? And it's simply, it's a self-fulfilling prophecy. The 10K comes out and that shows people that there's a hidden value here. And then the stock starts going up and that puts the stock into Russell 2000 qualification territory. And that spurs more buying from speculators. And I used to, I actually do this. I will take advantage of situations like this from the Russell situation, right? And then that it gets exacerbated by management buybacks because the last sale got closed. And then that gets exacerbated by the institutions that have to buy. So like I said, it becomes like a very self-fulfilling prophecy and, along the lines of a short squeeze. But the great thing about this is that you don't have to worry about the valuation getting too high in the midst of this squeeze, because the actual value of what you're buying is $25 a share.
Awesome. All right.
And so that's why I don't feel uncomfortable coming out here and saying, hey, it's not really a chase at these levels. Could it pull back from a technical standpoint? Sure, right? But as long as the stock holds up anywhere near these levels, we've got forced buying from institutions on the order. Like I said, they're going to buy $20 million worth of stock over the next, 2.5, 3 months to get their shares to put into the Russell 2000. So between the management buying up, the institutions buying up, and that actual fair value waking up some investors to what it's actually worth, you've just got all the catalysts you need to keep the thing going. Doesn't guarantee it'll happen, but you've got a lot of support.
Cool. Very fascinating, interesting. We'll put I don't have a position, by the way, full disclosure. I do in Kodak. So I'm going to put this on our watch list. We do a pre-market show now every morning at 9 a.m. I'll make sure to put this on watch, see how it goes this week. So awesome. Thank you, Mark, for that presentation. I guess we have time for one question, maybe. Does anyone have a question? If you do.
Yeah, I do have a question.
Go ahead.
Hello? Can I ask
Yeah, we hear
a
you.
question? Yeah,
Yep.
go ahead. The TD Ameritrade is showing $5 dividend. What is that? Did this company ever paid any dividend?
Yes, they have paid dividends. And like I said, when this company has an opportunity to, if they have cash that comes in for these sales, and in conjunction with, if they don't feel like that use of cash should go towards buying back stock, then they'll return that to shareholders. That's part of the activist movement that took place. Part of the settlement was that they would start selling more of the rights, monetizing more of the assets they have, doing buybacks and doing special dividends.
Okay, so this $5 shown there, it is from a past dividend. Is that what it is?
Yeah.
Or is it a mistake?
Yes, that was back in November of 2017. They did that buyback. Right. Okay. So what's interesting here, and that's actually that's a great point that you made, right? Because on the chart, what you'll see is that the breakout to new multi-year highs that recently took place, people will mistake that they didn't take out the 2017 highs. The stock actually has taken out the 2017 highs, because on an equivalent basis, the stock right now is actually at 21.45. Because right after it hit that all-time high in 2017, it gave out $5 dividend. So these stock charts are not accounting for that dividend. So now we are at a high. We're at a high that hasn't been hit since early 2015. Actually, late 2014. So this is like an 8-year high.
Fascinating. Good story. Thank you, Mark, for bringing that to us. Thanks. Let me just throw on my screen share here, and we'll finish off a couple things. So yeah, if you want to collaborate on that in the story trading community, you could do that in our VIP research room. In fact, Mark threw in a bunch of resources to VWTR tonight. So great presentation on that stock. I learned a lot about that for the first time tonight. I was telling Mark, there's so many stocks going around in our two different communities. It's so hard for me to actually focus on anything unless it's presented at one of our programs. So now that it's presented, I'm going to take this one real seriously. Thank you, Mark.
Yeah, what's starting to happen is some of the leaders out there, like, Maj, you, me, we're starting to kind of gather together and say, okay, what's your best one or two picks? And we start to collaborate on that because we're seeing the same problem. There's like a fire hose of, great shorts and great longs unfolding as this market gets really, volatile. So, looking forward to more going forward with you guys.
Sounds great. And I'm looking forward to hearing your thoughts on Kodak a little bit later in the room.
Yeah, I'm checking into that. Thanks a lot.
Oh, thank you guys. All right. So you can get the latest. Follow us on YouTube and on Twitter at StoryTrading. I'm going to hang